Welcome to Geojit Spotlight. In the struggle of a global economic slowdown, India is witnessing a stroke of fortune. After initial hurdles, the outlook for FY24 is poised for a gradual yet promising transformation. FY23 had wrapped up on a subdued note with subpar earnings growth and soaring valuations. Initially, it did have a mirror effect on the future forecast for FY24. However, when the domestic economy remained resilient to global challenges and inflation started to peak out, it eventually led to an upswing in India's corporate earnings. The Q1 actual results not only surpassed the forecast but also delivered an impressive 10% outperformance with an actual Nifty PAT growth of 30%. The most incremental growth providers were finance, auto, and oil and gas sector. The weakest were metals and FMCG due to high inflation, while rest of the other sectors were mixed with a positive bias. And the delight is that the optimism is expected to continue in Q2. The Nifty 50 consolidated PAT is estimated to grow again by a whopping 21% YOY, a similar number forecasted in Q1 of FY24. Once more, this growth is expected to be driven by stellar performance in the auto, finance, and oil and gas sectors. On the other hand, instant improvement is estimated in sectors that were muted in Q1, such as metal, FMCG, telecom, cement, and infrastructure, due to moderation in inflation and improvements in household and government spendings. Overall, sectors like IT, pharma, ports, power, chemicals, and FMCG are likely to register restrained figures. If the projected Q2 results coupled with the actual Q1 performance materialize as expected, the Nifty 50 index EPS is set to witness a robust 25% earnings growth in H1 FY24. Market expectations suggest an earnings growth range of 20 to 25% for the entire FY24, surpassing the initial conservative forecast of 10 to 15% put forward by experts and analysts between January and March 2023. The notable enhancement in earnings growth is primarily due to the expansion in EBITDA, attributed to the decline in essential commodity and input costs such as crude oil, metals, and food grains in 2023 compared to the preceding year. Till date, Nifty is up by 14% in FY24, below the 20 to 25% earnings growth being forecast for the large cap stocks today. However, at the same time, the mid and small caps indices have experienced a substantial surge of 35% to 45%, hinting at the possibility of large cap to outperform in the upcoming period. Now we can look at the sector-wise performance, which sector will be perform well in Q2. On the positive side are banks, where earnings are poised to remain healthy, supported by healthy credit growth, but margins are expected to moderate due to the rising cost of deposit and reduction in treasury income. Cement sector. The demand is likely to remain healthy during the quarter, driven by healthy volume growth from infrastructure and housing projects, and improvement in operating margin due to fall in raw material costs. Capital goods. The sector is poised for a strong quarter, held by substantial order inflow and efficient execution. Margin expansion is anticipated, aided by the softening of commodity prices, but valuations are at peak levels, limiting the upside trend. Auto. The demand for Q2 FY24 is likely to be mixed with a positive trend on passenger utility vehicle and commercial vehicle, continued as margin expand led by moderation in metal cost, but two-wheeler cars, tractors likely to decline. Now we can look for the laggards. That means the sector which will be likely to underperform in this quarter. FMCG volume growth is expected to soften in Q2 FY24, attributed to surge in inflation and an uneven spread of monsoon affecting the rural demand. IT sector. The growth is expected to remain weak in Q2 of FY24 as macroeconomic uncertainty continue to weigh on discretionary spending from corporates and households. Pharma. The US generic segment is forecasted to report double-digit growth, while aggregate sales in the domestic formulation segment is expected to witness moderate growth, affecting overall sales growth to be muted. Chemical sector. The downtrend in realization is expected to affect Q2 amid persisting global macro headwinds and aggressive dumping by Chinese players, while the cooling of raw material costs will provide some respite in margin. Thank you.